Right now on IMF Today, from inflation to price pressures, the cost of living to debt, the state of the global economy was up for debate today at the spring meetings.
We have to look for addressing root causes, and the war in Ukraine is one of the root causes.
Fragmentation can really be a risk for economies of Africa, of emerging markets.
We have to bring inflation down, and at the end we will succeed.
While the case for digital transformation is clear, there is still a lot of untapped potential in the MENA region.
Let's give the fintechs the space to exist and to come up with new solutions that have not been introduced in the market before. And let's push the incumbents to partner up with these fintechs.
We have overcome enormous challenges these last years. We can and we must do it again.
Hi everyone and welcome to IMF Today. I'm Amanda Walker. So, with everything that has happened, a war, a pandemic, the cost of living crisis, what is the status of the global economy? Well, that was the big debate today here at the IMF Spring Meetings. A headline seminar took on the issue on the stage behind me. The consensus? Plenty of room for improvement. Moderator Sara Eisen asked the panel where they see the global economy at this time next year.
I try to be optimistic. I believe in 12 months we are in a much better shape compared to today.
Okay. My answer is I would take out the much. We will be in better shape than today.
Leaders are always optimistic.
Well, I am optimistic. I think that, a Polish economy will definitely be in much better position, but also I believe that the global economy after those shocks will find its way through, will maneuver between the rocks and will find its way and will be in a much better position. But I believe that at the same time, those underlying issues will get accommodated, absorbed appropriately by the policymakers.
Last year was the worst case scenario. So I am optimistic for the future. I think what policymakers have learned also is to be some or less humble and to, I would say, rethink their policy during the year. We couldn't do this earlier and go back to Parliament and said, we need to change, we need more money here, less money there. But today we cannot afford in this uncertain time. And this is what gives us hope that we will be able to be more resilient and probably more agile for future growth.
Raghu, you're the only one that's not a policymaker right now, so you can be fully honest.
I'm always optimistic. We'll hopefully be recovering.
Recovered?
You said the world economy will hopefully be recovering.
Sara, what doesn't kill you makes you stronger.
The repeated use there of that magic word, optimism. Earlier I had a one-on-one chat with Rajan of the University of Chicago about the challenges ahead of us.
Clearly one big issue is interest rates going up. And of course they're going up in an environment where we've had really low rates for a really long time. So people haven't experienced this. You're also having a tightening of liquidity at the same time. So that combination of higher rates, lower liquidity can be problematic for the financial sector. We've already seen examples of this in the UK and the US. So that's one. Of course, this permeates to other countries. Credit becomes tighter. So we have debt problems in a bunch of countries that need to spend on a whole bunch of things that are coming down the line. Climate, for example, disasters. Pakistan is in the midst of dealing with last year's floods. So that's a second problem. Third problem is, where does growth come from after all the stimulus has been exhausted? We need growth. And unfortunately, some of the underpinnings of growth have sort of come off. For example, globalization was a big factor for growth. In many areas, it's weakening. So that's number three. And number four, we have the old problems, aging, and the new problem, climate change, disasters coming, a little faster than we would want, including to the poorest countries in the world. So we have our plate full.
You mentioned those poorest countries in the world. What can financial institutions do to try and address the needs and priorities of those developing countries and emerging markets?
Well, first, I think they have to do their bit, which is present a more sort of attractive case for financing. So they have to get the institutional structures in order. They certainly have to try and create more space for projects which are clear and can be financed. So they have to do their bit. But also we have to recognize that, finance has to come from outside. And already these countries have an issue with high levels of debt. So the financing that has to come certainly has to be, in a sense, aided by support from international financial institutions. That can't happen if international financial institutions take hard debt as the first claim. So there has to be some kind of grant support, some kind of an equity support to these financings. So clean up the project, make it viable, but also offer a certain amount of support so that they become viable. And then you will get private sector money coming in. But you can't keep saying private sector has to step up, private sector has to step up, and the risks are as they were before. Well, we can keep saying that, but they won't come.
Okay, you've written recently that there could be more banking sector turbulence. How worried are you? How worried should we all be?
Well, I think we should be cautious. I don't think you can declare it's all over, mission accomplished, until we've seen for some time what's happening. What you're seeing certainly in the numbers is a steady drain from the banking sector. I mean, take, for example, money markets, reverse repo funds. This is what they're getting and putting back to the Fed. That's been growing all of March. So we need to be sure that this thing is over. And, my sense is that there was so much money flooding into the banks, partly as a result of quantitative easing in the US. And that's made the banks more vulnerable when the money comes out. So, when this is done, we also need to explore the role of monetary policy in all this. Do we need to be as aggressive as we were in the past? Is there a trade-off? Overly aggressive on monetary policy create more financial fragility. We've seen that 2 or 3 times already in the last 20 years. When do we start picking up the lessons?
Okay, Rajan, thank you very much.
Thank you.
And there's a lot of talk this week about the lessons learned in the past few years. During today's debate on the global economy, Managing Director Kristalina Georgieva said the most important lesson of the last few years is to think of the unthinkable, because you never know what's going to happen next. And in her press conference on her global policy agenda earlier in the day, she reminded us why now is the time to be resilient and think globally.
At this moment in time for the world economy, vigilance is absolutely paramount. Yet, for the most vulnerable members of our global family, additional support from the international community is essential. Us being here this week, we have to be mindful of our duties to them, and I want to make a double plea on their behalf. Help them resolve crushing debt burdens and help ensure that the IMF can continue to support them going forward.
Today's other big seminar took a close look at a region suffering from long-term economic challenges, the Middle East and North Africa, specifically the digital technologies presenting new opportunities for businesses and young entrepreneurs. Now, the digital benefits app, Khazna, is a prime example of that. It's a startup that launched in 2020, and it aims to make life easier for underserved consumers and micro businesses by providing access to financial services. Fatma is the Chief Strategy Officer of Khazna. You were on that panel on the stage. First of all, I want to understand really, Fatma, what made you think there was a need for this? What were you seeing?
I mean, first of all, thank you for having me here. It's an honor. I'm Egyptian and I've lived in Egypt for quite some time, and we've always seen sort of the underbanked population as part of the issues that we have in Egypt, and it's been there for years. And just like I mentioned, we thought it was the right time for two main reasons. The push from a regulatory perspective and financial inclusion becoming on top of the agenda. And with that came a lot of new regulations that would support fintechs to exist and would support fintechs to collaborate with the incumbents and with banks to come up with new products in the market, catered specifically to the needs of the underbanked. And from the other side,
do you mean by that? So there are obviously people who exist in this often very elite-feeling world that is quite exclusive to people. Is this about giving people who are outside of that more access to build their own businesses and to know, to have the insider knowledge that sometimes is inaccessible?
I think it's about creating opportunities for people like me and for the different entrepreneurs out there in the market to come up with, look at the different things that are happening in the world and try to create similar things that are localized for the Egyptian market that might have not been easily done before with the absence of regulations.
Okay, so how do they make an actual difference? What have you seen?
So we've been a prime example of that. So for example, we were the first fintech in the country to get an approval to launch a prepaid debit card that's linked to a mobile app that's targeting specifically that segment. And obviously since then we've seen other fintechs do the same. But it's just these kind of products were not available in the market if it hadn't been for these new regulations to come up. And I think if it wasn't for the regulatory push and making it a target for financial institutions to meet the financial inclusion targets.
So what do you want to see? What do you need from policymakers to boost your efforts?
I think so far it's been great. When we look at the different startups in Egypt, I think being a fintech player at this moment in time is really a privilege because you get all this support. But what we'd like to see as a scale-up at this point is more development in the capital markets. Less on the equity. I think international investors are now familiar with Egypt, but more on the debt side.
So being here, how important is that in terms of you furthering your goals? Have you made some progress this week?
I think it's just phenomenal to be here. I mean, this is a great hub. You get, obviously the IMF and the World Bank have a lot of say around pushing forward new policies, new regulations, making our voices heard. So I think giving us, whether it's me and my other colleagues that were on the panel, the platform to speak up has been a great honor.
Okay, we're joined now by Tommaso Mancini-Griffoli, who is the Division Chief of the Monetary and Capital Markets Department at the IMF. So a prime example here of what Fatma's been talking about in terms of getting that access to services. How can we see this more broadly? Talk to us generally about the role that fintech can play.
It's a great pleasure to be here, Amanda, and to see you again, and to be on stage with such a great entrepreneur.
Yeah,
I'm just an economist, but I'm happy to speak about the bigger picture, as you say. And I first of all think back to the managing director's curtain raiser. She said three things are important: growth, inclusion, and stability. And I think that fintech can contribute to each of these objectives. So take growth. Fintech is opening the way for new business models. Business models based on data, often, new innovations. Take Indonesia, where you have a new wallet service that is becoming a one-stop shop to access financial services for the country. Take financial inclusion now. Fintech can also help. Financial inclusion profits from fintech because it's now easier and cheaper to access financial services. Take India, where we have seen a great number of people accessing financial services. Why? Because of digital identity. They've been able to be onboarded by banks. They've opened bank accounts, and they're making payments that are nearly zero cost. A street vendor can print a QR code on a piece of paper, stick it on his or her cart, and with that receive payments from anyone in the economy. Stability is also very important, and here I'll refer to crypto assets. Crypto assets are still alive. Some have said, let them burn. They've burned, but they haven't disappeared. And it's important to get the rules right relative to crypto assets. Get them right because of consumer protection, get them right because of financial integrity, but get them right also because of macro-financial stability. We want to ensure, for instance, that it doesn't become so easy for people in economies with high inflation, volatile exchange rates to suddenly hold dollars in digital form. It used to be difficult to hold dollars because you had to stuff them under the mattress. And now you can hold them on your phone, but we want to limit that type of currency substitution. So these are all issues where crypto assets need to be contained. But these are all also issues where digital money can help in the big picture.
Okay, so much to say, such a growing important trend. Tommaso, Fatma, thank you so much for joining us on IMF Today. Now, Russia's war against Ukraine has impacted the world, presenting a series of challenges for Europe and the wider global economy. As a neighbour, Poland's role stands out. Polish Prime Minister Mateusz Morawiecki is currently in Washington, D.C. to strengthen economic and military ties with the US. On Tuesday, he met Vice President Kamala Harris, and today he took part in that panel on the global economy. Earlier, I asked him how the war has affected the Polish economy.
People tend to think that maybe we are spending enormous amount of money on refugees. Yes, within the first couple of months, we did spend a couple of billions of dollars. But right now, most of the people who came to Poland contribute to our economy. They pay taxes, they pay social security. So by and large, this is not the major cost. The major cost, and the major impact on our economy goes through the inflation channel and the credit availability channel as well, which go in tandem. And the inflation is related to energy prices. Energy prices are related to Russia and Russian attack on Ukraine. So indirectly, our economy is very much hit by this war, but not directly by refugees or Ukrainian population in our country.
So you mentioned some of the pressures that the war has put on the Polish economy. This war isn't ending. What will your priorities be? How will the economic policy adapt to essentially perhaps fit a new norm?
Well, first we were smart enough to diversify the sources of delivery of gas. Providing gas through Russian pipeline system has been completely turned off. And we are now independent of Russian gas and Russian oil for the first time in our modern history. So we are able to fight with the Russian fossil fuels because we have built a new pipeline system to Norway and other interconnectors. Through this, we are also already experiencing lower inflationary pressures. So if you ask me about how we are going to fight with those recessionary pressures, this is also through the energy channel. We are diversified. We try to source gas and oil from the cheapest possible places in the world, and we already see that the inflationary pressure is weakening.
A lot of conversations here at the IMF Spring Meetings have been about fragmentation. So this idea that the pressures and the risks the world faces are having this kind of reverse globalization effect. Poland has benefited from an integrated economy. How concerned are you about this notion of fragmentation, and is there anything that you are doing to kind of try and put the brakes on it?
No, because we see also the ups and downs of globalization, and I think that now is the time for reshoring or friendshoring rather than offshoring and outsourcing all sorts of different functions, because lots of technology has been sold or spread all around the globe, and we now see that some of this technology is in the hands of bad guys. There are not only good guys around us, there are also bad guys. Russia in particular is a very good example that the West was selling lots of technology to Russia, and now Ukraine and the West is being attacked by Russia with this technology. So we have to end this type of globalization, and Poland is actually benefiting right now from this reshoring, nearshoring, friendshoring tendency, which appeared, which started during the pandemic. And right now, the many multinationals try to rediscover themselves, redevelop the value chains and production chains. And Poland is in Europe #1 and in the world #3, #4 destination for those international companies to deliver new operational models, to create new operational and stroke business models.
Prime Minister Morawiecki, thank you.
Thank you so much. Thanks for having me.
Nearly 1 billion people are facing challenges like extreme poverty, displacement and war. If the current trends persist, nearly 60% of the world's poor will live in these fragile and conflict-affected states by 2030. Helping these people and these countries is a focus for the IMF and a big topic at these meetings. Dier Tong is the Minister of Finance and Economic Planning in South Sudan. So obviously so many countries coming here, Dier, with their unique concerns. But can you paint a picture for me? Take me to South Sudan. I'm sure many people have never been. What are the challenges on the ground? What are you seeing?
Thank you very much, Amanda. I'm very pleased to be here. South Sudan is the newest country in the world, getting its independence in 2011 after a long protracted years of war since 1955. So in effect, South Sudan is trying to rebuild its pieces together. The long civil war has destroyed all the infrastructure, all the service delivery all this time. But now, as a country, we are doing our best. We are doing a massive economic reform to create a conducive environment whereby private sector can come in, whereby investors can come, and also the government is trying to refocus the scarce resources that we have to make sure that, you know, they're focused into service delivery.
Can you tell me about day-to-day life? What are the big challenges on people's minds?
Well, as I said, because of these long protracted years of conflict, people are coming back from refuge. They are trying to rebuild their lives. They are trying to get the basic rights. But it is.
So it's things like housing, jobs, just trying to have that family security and stability.
Yes. But of course, you know, South Sudan, like many other countries that we call the countries that are coming out from fragility and conflicts, are suffering the same fate. The G7 plus, for example, countries, which are a group of about 20 countries in the Pacific, Africa, Asia, and the Caribbean, are facing the same fate. But we have come together now, grouped together, so that we are able to learn from our stories and see how we can rebuild our countries.
And the IMF has this new strategy to help fragile and conflict-affected states, FCS states, and the recently approved $114.8 billion. What impact is that support from the IMF having on the ground?
Well, I think the IMF strategy on the fragile countries is timely. And in fact, it is an intervention in order to address the challenges that these countries are facing. Coming to South Sudan in particular, we have benefited a lot from the IMF in terms of allocation that have been given to South Sudan, and also in terms of capacity building that is tailored, you know, for us to reform our economies, put credible macroeconomic policies in place. And for me, the importance of that is that it links really the importance of a credible macroeconomic structure with the peace, because without strong economic policies, it will also be difficult even to sustain peace and to maintain peace.
Okay, Dier Tong, Minister of Finance and Economic Planning in South Sudan. Good luck with the rest of the week. Thank you for joining us on IMF Today.
Thank you. Thanks for having us.
One of the prominent conversations at these meetings centres on how the IMF is helping its member countries. We talked a bit yesterday with Ceyla Pazarbaşıoğlu, the head of the IMF Strategy, Policy and Review Department, about the nearly $300 billion in new financing for 96 countries since the start of the COVID pandemic. Managing Director Kristalina Georgieva echoed that number in her curtain raiser speech and also referenced the $650 billion in special drawing rights allocations that is boosting member countries' reserves. But the IMF doesn't just give out money. It also works with countries to strengthen their economic institutions. And that happens through training and technical assistance through the Institute for Capacity Development. Dominique Desruelle is the director of that centre and joins me now. So just tell us, first of all, I mean, what have your priorities been this week?
Right. So you know, if there's been one theme from the week that we've heard across all of our engagement has been, how can we be stronger, more resilient to address all of the shocks that, you know, that are being thrown at policymakers, right? And so you can, you know, it is fighting inflation, it's reducing debt, it's handling, you know, transition to climate. So just maybe to give you a few examples of their, you know, then this policymaker says, you know, I want strong institutions, stop people so that they can help me, help the country take the right decision, implement the right decision. Maybe just to give you a few examples of that, right? You just had the Minister of South Sudan.
Right.
Huge fiscal issues. We are going to place in South Sudan a resident expert on fiscal issues so that it can help directly on the ground. Yesterday we had a great meeting with the Deputy Prime Minister of Cabo Verde. They need more clean water, they need more electricity, but they're, you know, they are a small island, they want to go green. They need to do a lot of public investment. Our colleagues in fiscal affairs are going to help them with a public investment management assessment and a plan. Yesterday we had a fantastic meeting with a lot of Caribbean ministers on the support we can give to them. Prime Minister Mottley said, you know, come and help us on the ground. We need the training, we need the technical assistance on the ground, and so we were working with her and her colleagues on sort of saying, we have a center in the region, how can we strengthen that center? So that's basically, in a sense, the theme. And obviously, to do all that, we need money ourselves.
Yeah, right.
And so therefore, we're having lots of great conversations with our partners to fund that. And for instance, just as an example, we are going to sign 2 new agreements this week with Luxembourg and Korea, and that's fantastic. So that's a bit of a team world effort.
Yeah.
You know, the countries that need the support, the donors that help, our staff and our experts, and that's really very exciting to be in all of that.
Debt. Sorry to put a downer on things, but that's a word that we're hearing a lot. It's a big concern. Your talk on debt management here in the atrium behind us, it was packed. People want to know how to solve these issues. What was your key message?
So in a sense, the key there was, you know, Gita Gopinath, you know, first deputy manager, started basically saying the landscape, which has to say, it's probably not the most thing that's most optimistic that we have, right? You know, debt rising, vulnerability rising. So a lot of work now that is being done, you know, to help countries that are really in serious difficulty, restructure debt, and then, you know, lots of policy work. But at the same time, and that was the theme yesterday, to say, what can we do together with the countries to sort of prevent too many problems happening? And that's where the building, you know, building the transparency on that, building the ability to manage that becomes very important. And that's where the capacity development side comes in. And so the 2 ministers that were there, the one minister from Georgia and one minister from, were really fascinating because they said, we are very clear where we want to go. We want to be prudent. We want to raise money for good purposes. Let's say, you know, public investment, roads, that type of thing. We want the confidence of our creditors. Come and help us at the technical level. Do that for us. Help us, you know, build a stronger public investment unit, a stronger debt management unit, and that's basically what we do. And it was, I think, was really fascinating to hear the experience. I hope many other policymakers will listen to that example, and we are here to sort of make it happen, right? They set the directions, and we are sort of here to help them with their own teams to make sure that, you know, they can implement what they really want to do.
And the work of the capacity development department, so crucial to what the IMF does. I'm interested, though, when you're dealing with so many countries with such specific needs and concerns, it must be a real challenge going in and paying attention to those sensitivities and those needs, and not going in too much saying we're going to tell you what to do. I mean, it's a very sensitive operation.
Yes, so that you're absolutely right. I mean, what is most important is to deliver not what we say should be said, but what our member countries really want. What the Minister of Finance, the central bank governors, the head of Statistical Institute, and there we work very, very closely with our country teams here, exactly to define that what is exactly that demand, right? What is exactly you need? Where can we be most helpful to you? It's a true partnership, right? It's not something that one part imposes on the others. Is we sit together, we think what would be most helpful to you, what can be really adapted to your circumstances. As you say, providing that type of support. Let's again to the example of South Sudan and Chile are two completely different things, and so we spent our time, talking, thinking, and then delivering, and that's really the fun part of the job, getting to know all of these specificities and trying to answer them as best as we can.
It's fascinating. Yeah. Dominique, could talk more, but thank you so much for your time. It's much appreciated.
Thank you.
Well, the Spring Meetings week has flown by. These buildings have been buzzing with ideas, plans, debates, questions and answers, and they're not winding down yet. Tomorrow, it's Friday, of course. We wrap up our regional outlooks, starting with the African department at 8:45 a.m. Some of the biggest business of the meetings also takes place with the IMFC plenary for most of the morning. That will be followed by a press conference from IMFC Chair Nadia Calvino and IMF Managing Director Kristalina Georgieva. We have two more seminars for you, one asking how should central banks battle high inflation? That's been a big talking point this week. And the second, examining the benefits of digital public infrastructure. And then tomorrow on IMF Today, we're looking ahead to Morocco. The country will host the IMF World Bank Group annual meetings in October. Delegates here in Washington this week have been treated to several cultural performances, and tomorrow will be joined by the Moroccan Minister of Finance. That's at 5 p.m. Eastern. So lots of thought-provoking views and perspectives on today's show. I hope you enjoyed it. Thank you for joining us on IMF Today. If you missed any part of it, you can, of course, watch it again at imf.org. We leave you now with a look at some of the best photos from around the fund today.